This episode of Where's My Money is brought to you by Enable Me. Start building your wealth today. Future you will thank you for it. Find out more at enable.me. Welcome back to Where's My Money. I've still got a lot of debt, and I'm still trying to figure out the world of money and finances. The official cash rate held last week. No move, no drama, 2.25%. Cool. What is that though? A quick refresher, the OCR is the Reserve Bank's key interest rate. It decides how expensive or cheap loans and savings are. Up means borrowing costs more. That's bad for you and me. Down means it's cheaper. That's good. So that one decision by the Reserve Bank will affect your mortgage, your savings, maybe even your job security, and maybe even the wider direction of New Zealand's economy. Scary stuff. Today, I'm joined by ANZ Chief Economist Sharon Zollner and Katie Wesney from Enable Me to break it all down. Sharon used to sit inside the Reserve Bank of New Zealand. Now she calls the shots from the outside. She's a big dog at one of the big banks. Even though OCR shifts seem big and confusing and a little bit like theoretical physics, it's not theory. It's about what changes in your wallet in the next few months. It's real. So let's find out how we can use it to our advantage.
Welcome to Where's My Money? One man, $1 million of debt, one podcast to find a way out.
Thank you for joining me both in the studio. Katie, you're no stranger to the Where's My Money studio. Welcome. But Sharon Zollner, thank you for joining me and joining a little bit of a panel discussion today.
Very small panel.
It's a tiny panel, I guess.
Exclusive panelette.
Exclusive panelette of two. You are the Chief Economist at ANZ, and it's great to have someone of such high calibre.
It's a little straight up.
That's right. Own it. Be proud of it.
You are used to high calibre guests.
I'm sorry. But this is like getting money royalty in the building.
Yes,
you know?
I agree.
So,
concur. Overselling me. Yeah.
But before we get into the crux of the OCR and what it can mean for Kiwis, I guess it'd be great if you could explain your role at ANZ and what that actually means day to day, because I think for a lot of people who aren't living in the finance world day to day, economist kind of seems like a crystal ball gazer. So you must be a very good crystal ball gazer to be the chief one.
So I'm the Chief Economist. I have been for nearly 7 years, a bit more even. I have a small team works under me, including an agri specialist, which is good, an interest rate specialist, and a couple of generalists. So we do predict the economy, but we are always at pains to point out why we could be wrong, because I don't think we're doing anyone any favours if we say this is what's going to happen, you should bet the house and your own personal financial futures on it.
Otherwise, we'd all be doing really well, right?
Yes,
you'd be right every time.
I wouldn't be in this job.
ball.
I'd just be an investor or a gambler, possibly.
Yeah.
But I think where we do have a role is in helping people understand the bigger context of the decisions they're making, whether that's whether to fix or float their mortgage or to take on a new employee or start a business or whatever, because everyone is subject to these bigger economic forces, and the less you know about them, the more likely you are actually to be buffeted by them in unfortunate ways. So we're an enormous bank, and we've got customers right from the very top echelon of the people who are right in the middle of financial markets and know everything technical, down to people on the street. So a big part of my job is speaking to the media and trying to translate some of that data in a more accessible way for those who perhaps don't have the time or interest to read the business pages of the newspaper in detail.
Cool. And that's kind of why this pod exists, is to help people understand this weird, wild world of financial confusion and help with a bit of that literacy. Do you think we are kind of a financially illiterate country, generally speaking? I know you've said that there's a few layers to our society, and that's probably the same everywhere around the world, but do you think we could be better generally?
Oh, one could always be better.
Yeah.
One of my favourite compliments I could get is someone saying, I didn't expect to understand a word, and actually that was really illuminating. Obviously, you sometimes get people saying, that was really interesting, but I can't remember any of it because that does tend to be a bit of a wall of data and a wall of sound if you're trying to analyse the whole economy. So trying to hit some middle ground where people get a few takeaways to make better informed decisions. There will always be some people in an economy who live hand to mouth. They spend every dollar that comes in the door and every dollar they can borrow as well. And then you've got people who are very, very clued up. So I just think it's, are we illiterate? No, obviously not. But can we improve? Absolutely.
Yeah, and I think as an industry, we're getting better at not using so much jargon, which just doesn't land with people, and it makes finances inaccessible.
Yeah. I think I've seen a shift in marketing from lots of banks and insurance brands and, all of that world to more relatable kind of brand feel, and the terminology they use in their ads is very welcoming and Kiwi in its approach. And it's cool that people are, pointing out to you that they feel like they're understanding more because of how you deliver it. There's probably a lot of what I see on social media, the big angry echo chamber that is, getting angry at the banks, particularly in the last few years. There's a lot of the squeezed middle of Kiwis that have gone tough. Their mortgage repayments have skyrocketed, like my own. People have lost their jobs, and then the banks make huge profits. Is it challenging to work for an organisation which is obviously there to make a profit? It's a bank. It's not a not-for-profit organisation, Is it tricky to navigate that conversation when people go, why are you making so much money? Not you personally, but why is ANZ making so much money, for example, when we are losing ours? Is that a tricky one?
Well, I'm very fortunate when I go and speak to a group of customers and I get that sort of question. One of the local ANZ staff will typically leap in front of me and take the bullet for me, which I very much appreciate.
Yeah.
It's not warming up here.
Yeah.
Jugular.
But I think, banks are intermediaries, and done well, it's a win-win. It doesn't have to be a win-lose scenario.
Yeah.
So, I started my career at the Reserve Bank, and I used to think, why would you want to work for financial markets that are trying to guess what the Reserve Bank's doing? Why wouldn't you want to be at the heart of the action? But of course, it was a massive organisation, still is, with a very funnel leading down to one decision. Whereas, in a bank, what you do, you're helping translate that to everyday people is really rewarding, and demands on our time and what we do are kind of infinite, so that whatever you're doing, it's important to someone, which is really satisfying.
Yeah, cool.
Yeah, and I think as a customer, you've got to be aware that the bank is a business, so it's about not being passive about your own financial strategy, which is, I think, really empowering message for people. So, for example, if you're using relatively expensive products whereby a big chunk of your mortgage is floating and you aren't going to sell your house soon, or you don't have the capacity to use that facility, we'll fix it and pay less interest. Be really proactive. For savings accounts where it's a less competitive environment, well, do the research yourself in terms of rates. And I know ANZ had an amazing cashback offer end of last year. Be open and be proactive in terms of taking advantage of that, because that can really help mitigate interest into
It's not
the
just
future.
banking, it's your power provider and your
Exactly
insurance provider.
right.
And all the
Exactly
services
right. So you really own your situation, be aware and control the controllables.
Because you're surrounded by tools that can help you do that too. There are those websites that can change your power provider. If you've got a good broker, they'll find the best deal for you in your current situation right now, and that's where good advice always comes into play, right? So you mentioned you were at the Reserve Bank. How long were you there?
I was there 10 years with a stint in Norway, actually. I went to the Central Bank of Norway for a couple of years. That was good fun.
Cool. Who's got the best work parties?
Definitely Norway, but the beer is very expensive.
Okay. So obviously the OCR is the sort of the genesis of this conversation, and yesterday they announced, they being the Reserve Bank, that the OCR is...
First one of the year.
Yeah, and it's stable. It's not shifting up. It's not shifting down. What does that say about where the economy is right now?
I wonder if we speak to what the OCR means as well.
Sure.
Let's do it.
So the Reserve Bank controls the official cash rate, OCR. That is basically the overnight rate at which banks borrow and lend to each other. They can control that. And that feeds straight into people's floating mortgage rates or their floating saving rate or whatever it is. But when it comes to fixed mortgage rates, 1 year, 2 year, 3 year, those depend on the wholesale interest rates that underlie those. And those rates will depend much more on expectations of what the Reserve Bank is going to do rather than what they actually just did or what they do next week. So what we saw in November was really interesting. The Reserve Bank actually delivered a final cut to the official cash rate. They cut it to 2.25, but the interest rates went up on the day because...
I remember that.
Yeah. So the OCR went down, but the 1, 2, 3 year swap rates went up because the Reserve Bank sounded more certain than people were expecting that they were done cutting. So the market then moved to rule out any more chance of cutting and start wondering very quickly when hikes would come. So we saw really quite a sharp V in those wholesale interest rates. So the market always anticipates. That's how you make money in financial markets, is being ahead of everybody else. So you always see those fixed mortgage rates move up before the official cash rate moves up and move down before the official cash rate moves down, unless the Reserve Bank has really mucked up its comms and no one's had any idea that they were going to do what they do. But that doesn't typically happen.
If everyone's doing their jobs right?
Yes.
Yeah.
So it's been 3 months since the last Reserve Bank's last decision, and in that time we've seen first that unexpected certainty from the Reserve Bank, which was justified by the data that subsequently came out, but also the data coming out stronger, both activity data but also inflation data was a bit stronger than expected as well. But then the Reserve Bank came out yesterday and just sort of went, everybody just chill. It's okay. Yes, inflation's a little bit high, but we are confident that it's going to start falling again really soon, and that we don't have to raise the official cash rate anytime soon. We don't think we'll be cutting it anymore, but we don't think we'll need to be hiking it till the end of the year. No promises, of course. They always reserve the right to change their minds.
There's never any promises.
No. But so what we actually saw was the wholesale rates come down a little bit and remove some of that upward pressure. So even though they're saying the next move is up, rates came down. So no wonder it's difficult to understand what the heck's going on.
So for someone at the end of the chain, which is, me, I don't work in the financial world apart from hosting a podcast about it. I look at my bank account and I see when my next mortgage payment's coming out. What do you think that means for people with a mortgage? What are the interest rates going to do based on nothing happening?
Well, the Reserve Bank had an impact on markets. We saw the 2-year swap rate fell about 5 basis points. Initially, it might have moved a bit more since then, I'm not sure. So whereas if they had come out and said, actually, we're quite worried about inflation, this doesn't look good, then you would have seen the opposite move and you quite possibly would have seen mortgage rates rise.
Yeah.
About this week, but they didn't. They came out and sounded very relaxed. That said, they're conditionally relaxed, of course, on everything turning out like they expect. So I would expect the data will take the reins very, very quickly from the Reserve Bank. They'll get their chance again in 6 weeks, but in the meantime, the market will react to the endless flow of data that comes out between now and then.
Yeah. So that's steady as she goes, and I guess that kind of suggests if the rate is going up, if there's certainty or uncertainty and our interest rates go up, they're trying to pull inflation back by not letting us spend as much of our own money, right? That's kind of the
Yes, so
idea.
they've only got this one tool, the official cash rate, and then, of course, the expectations of where the cash rate's going to go are just as important. So that's why they go to all this trouble of producing forecasts, including a forecast of what they think they will be doing with interest rates, because that's super duper important. But yes, they raise interest rates if they are worried that down the track inflation could be too high, that the economy could overheat. And of course, we had that spectacular overheating during the COVID period when mistakes were made. So that was quite an interesting case study of what happens if you get it really wrong. We had a lot of fiscal stimulus, a lot of monetary stimulus, because it was thought that the COVID shock was primarily a negative shock to demand, that people would be completely freaked out, would stop spending. And so what you needed to do was boost demand through lower interest rates, which raises house prices, which gets people spending. People are more likely to borrow to buy a car or employ someone or whatever it might be.
And we did all of the things.
We did all of that, and demand went nuts. But actually we underestimated the power of the wage subsidy. Once people realised money was going to continue coming in the door, then they kept spending, and we had all this extra stimulus from monetary and fiscal policy, and then the supply constraints were massive. Actually, you couldn't get a fridge for 6 months. If you wanted a car, you just had to take whatever there was. There were shortages of everything, so retailers could charge whatever they liked. So inflation shot up above 7%, which then, of course, the mistakes were recognised, and the interest rate shot higher much more quickly than anyone had expected.
Thus, Where's My Money was born, a podcast for me to get out of my debt situation.
Yeah, and it makes me a little bit cross when we think back to the time when we were paying like 2-3% on our mortgages.
Yeah.
and we went and we spent when we actually,
God, I know.
if only we'd been a bit more measured and said, well, this is our time in the sun, let's try and pay this debt off faster, because that insulates us hereafter when the rates will rise, because it's all cyclical.
Yeah. But you literally had the Reserve Bank governor coming out and telling people, go and be brave, go and borrow some money and do something with it. So
Get
people
were
doing what they were told.
Yeah.
They were responding to the incentives
I think
that
it's
were
human
provided
nature
to
as
them.
well.
So I'm not pinning it on the New Zealand consumers being gung-ho. They were told to be gung-ho. They were given the price, the interest rates to be gung-ho. It was a policy error. And I'm not out there throwing rocks because our forecasts were no better, because if you look at the data, it's like in a heart attack. It just went completely nuts. You could not discern a trend through it.
Right. Okay.
With hindsight.
Hindsight's
mistakes
2020, as
with-
they say.
Yeah. And what I'm hearing from all of that is that the OCR is like a really important indicator of what is going to happen and might happen into the future. But there's lots of different things at play in terms of the wholesale rates, demand, etc., that feed into what you and I pay on our mortgage debt.
Even beyond our shores, what Donald Trump says in a news report will affect what I've got in my wallet 6 months down the track. Like, it's crazy to fathom that so
100%.
much is tied to how much money I get at the end of the day.
Yeah, I mean, the Reserve Bank publishes this record of meeting and talks all about all the reasons they could be wrong, all the risks that they discuss to the upside and to the downside. But what's interesting at the moment is one of the reasons that they're confident that they don't need to raise rates anytime soon is because they think we're going to have a recovery where the housing market sits on the sidelines. That is very unusual. And without house prices increasing, people won't feel wealthier. So therefore, their spending won't increase so quickly. They'll sort of have to wait for their wages or employment or their hours that they're doing to increase, and then they'll spend more.
That sums up exactly where we are right now. Like our house value pulled back like 300 grand, and that was a good
Fell
portion
last month and the month before that. So
So now, I don't
modestly.
want to go on. Like, I want to go on holiday. Don't get me wrong, but I'm like I feel a bit guilty spending that money because we've lost value over here. So it does kind of psychologically work on paper.
And your house is not buying you a new car at the moment, for example. So so it does make quite a big difference to perceptions of wealth. So if we're just going to spend out of our incomes for a while, then that's still an economic recovery, but it's maybe going to feel like hard yards, but it's also a lower risk. Because booms and busts are quite damaging. Just look at the number of people we've lost to Australia.
Yeah.
We've lost a lot of supply capacity of the economy as well as demand. It's not like everyone just sits around twiddling their thumbs waiting for things to get better. They respond and they move. And so, that boom busts are not good. So a recovery without housing is a low risk one. It might not feel great, but it should be quite sustainable.
That's really interesting. So you mean by sitting on the sidelines, you mean everything else is going to start to react a bit more, whereas housing is going to be stable where it is for now?
Yeah, we're forecasting house prices to go up 2% this year. I think the Reserve Bank's forecasts are even less than that. So they've noted they could be wrong about that. But if the housing market starts to lift more strongly, then interest rates are going to go up sooner than otherwise, and that'll head it off.
What if housing supply changes? Because I've just seen Nationals said that they've changed the Auckland unitary plan, so they're going to pump less houses into Auckland. Therefore, is that going to help the value of my property if there's going to be, again, another factor to take into consideration on top of the OCR is a political party in an election year changing something that's going to help a lot of people, but is it?
Oh, there's definitely winners and losers with house prices like there is with anything else. Rising house prices make those who have houses feel better off, but make those who don't have one feel worse off.
And like they're getting left further and further behind from the ladder,
Exactly, yeah. So what has been interesting in this cycle is that the building consents, while they've fallen a long way, they were crazy high. We were building more houses than we've ever built before. They've dropped a long way, but it looks like they've actually bottomed out at quite a high level. So we managed to, it's mostly Christchurch and Queenstown to be honest, but we managed to maintain a decent rate of house building, which is awesome for housing affordability. But the flip side of that is that it means less upward pressure on house prices now, because while there's a lot of people waiting to buy a house when rates came down, it turned out there were a lot of people waiting to sell as well. So the increase in listings has actually outpaced the increase in sales. And so that's why there's no price tension in the market at the moment. It's still I mean, every house is different, but generally speaking, it's still a buyer's market.
What does your ideal retirement look like? Picture it, and Enable Me can help you achieve it. From financial coaching to strategic advice, they've got you covered. Pay down debt, grow your wealth, and retire well. Head to enable.me to get started.
Yeah, lots of people are waiting for this mythical time when their house was worth X amount.
Yeah.
So,
You're waiting to just get over the threshold. Now I'm ready to sell it, or now we want to renovate.
Yeah, absolutely.
Yeah, that's not entirely rational from
But
from
none
a
of
sunk
this
cost
is rational
point of view,
either,
but it is
you
a
know?
psychological hurdle.
It really is. And I suppose in knowing that you'll never have ultimate certainty as to where interest rates will go, where house prices are, then you've got to control what you can control, which is your actions every day, which we talk about in terms of making sure you have a great mortgage strategy, ensure you're not floating too much. If you want certainty, you know how to do that. You fix your mortgage so that you're sleeping at night. Again, you're just being really forward in terms of action and controlling what you do today.
Yeah, stay on top of the intentional decisions around
Yeah,
everything.
absolutely.
And don't just hope that letting everything kind of drift is the answer.
Not doing anything is also a decision.
Yeah,
Might not
totally.
feel like it, but it is.
With the greatest opportunity cost, to be honest, because the window closes to take action. And I think lots of people have been waiting for this bottom of the market to come. And I think in our minds, we're harking back to that 2-3%. And I seriously doubt that is coming back. And if it does, we're in serious trouble.
Exactly, yeah. If
So
interest
no
rates
one's
go,
wanting that. No one's wanting
be
that.
careful
so
what you wish for.
Again, I think often it's this waiting period and people float their mortgages waiting for this mythical best time, and then that window closes and they end up fixing. And actually, if they've just done it when maybe it was even a bit higher, they actually would have paid less because there's such a premium at the moment,
And
over 1% between fixed and floating.
And they could have budgeted for what they would have been
Exactly
paying, which
right.
is certainty, which
And
makes things a
also
little easier.
directing energy elsewhere in terms of not like looking at interest rates every day, because life is short and I've got better things
You
to
see
do.
similar mistakes being made by people who need to sell a house. There's a very predictable gap in the market. When the market first turns south, people are very unrealistic about what their house is worth, and they will not budge, and house sales just plummet.
Yeah.
And then it just comes to a complete stop. And then finally sellers start to get a little bit more
Pragmatic.
realistic as the real estate agents are trying to convince them that actually, gasp, horror, their house is not worth as much as it was.
Yeah, totally. No, like there's open homes in our neighbourhood that we'll go and have a nosy at, as you do, and you hear what they're expecting, and you're kind of like,
Telling he's dreaming.
Telling he's dreaming, exactly. But a few years ago, they totally would have got that number.
Yeah.
But it's like your expectations do need to shift a little bit.
Particularly if you paid a higher price, it's really hard to
Yeah.
accept that you might be best to take a loss.
Yeah, and I think that's hurt people twofold, because they've bought these properties that on paper went down in value, and I think particularly of Wellington.
Yeah.
And they budgeted for lower interest rates when they were doing their maths, so potentially over-borrowed. And when interest rates went up, that is when it really hurts on an everyday basis in terms of just not having enough money to live.
Yeah, so house prices peaked in November 2021, and there were a lot of first-home buyers who just sort of extrapolated and thought, if I don't get in now, I never will. And look, the mortgage payments are lower than my rent, so how can this go wrong? And then in 2022, they found out exactly how it could go wrong. It was a vicious turn in the market.
Yep.
So, but what's remarkable is we had the biggest housing bubble in the world during that time. House prices went up 50% in 2 years from levels that were already problematically high.
Yeah.
So to come out the other side of that with no financial stability concerns, and what's been a very, very orderly adjustment, I'm not saying it's been painless, particularly for those people who bought in 2021, and if it was their first home with a lot of debt, it's been extremely painful. Yep. But at a system-wide level, we kind of got away with it, and it's partly because the lending was responsible, but it's partly also because of inflation.
Yeah.
Because inflation, particularly unexpected inflation, inflates away debt. It also inflates away savings. So if you imagine someone who had a term deposit fixed at 2 and someone who had a mortgage fixed at 4 and then inflation shoots hard at 7.3, there's a very clear winner and a loser. There has effectively been a transfer of wealth from the savers to the borrowers that no one signed up to, but that just happens mathematically. And so basically we've gotten real house prices relative to incomes. We've undone that whole bubble, even though nominal house prices only gave up half their gains. So if we hadn't had that inflation, nominal house prices would have had to fall a lot further to achieve the same outcome, and we'd have a lot more people sitting in negative equity, really quite financially stressed.
Wow.
Does that make sense?
Yeah. No,
Yeah.
a whiteboard would have helped me a little more, but I was doing the whiteboard in my head. You'd make a great teacher.
Yeah, you really would.
Yeah.
So it's just, I find it fascinating. Everyone hates inflation. You can see that in 2021, consumer confidence tanked even though the economy was booming because inflation took off. That's how much people hate it. That's why we have inflation targeting. But every now and then it can help you get out of a corner that you've painted yourself into.
Yeah, that's really interesting.
Yeah, and that's often when we talk about those wealth creation strategies in terms of our clients who are invested in property.
Yeah.
It's often a risk mitigant to hold some debt because, again, that's that natural hedge against inflation into the future.
Interesting. So you think we've recovered pretty well from a few years ago? Because sometimes I feel like
Green shoots.
green
No, we're into
shoots.
seedlings now.
Oh,
Past green
oh.
shoots.
Fantastic news.
But I mean, people think of recessions as a disaster, and they sometimes think they're an avoidable disaster. But when you've had the sort of boom we have, you have to have a bust. It wasn't just about getting inflation down. Our trade balance was absurd because we'd lost tourism and we'd been importing all this stuff. So that was hugely negative. So we weren't remotely paying our way in the world.
Yeah.
Household prices were nuts. Household debt was higher. And so we had to kind of steady the ship and get back on a more sustainable path. And the slowdown was very painful, but it achieved all those things. We're actually quite well placed to grow again because having inflated away all that debt, household debt's back relative to incomes is back where it was. Corporate debt's lower than it was before COVID. What's not lower is, of course, government debt. That's the difference between 2008 and now. In 2008, everyone borrowed too much and we all sort of collectively slapped our foreheads, and there were sort of 3 or 4 years of balance sheet repair where it just felt like the economy was never recovering. And it has felt like that way this time too, but actually in a purely business cycle sense, we've undone the damage in terms of balance sheets. The debt levels aren't unusually high by New Zealand standards, and we're kind of good to go.
Because I was going to say, particularly in the last few weeks, was the more adverse weather events, weather bombs as we love to call them. I'm driving to work, I've kind of forgotten about my own personal problems for the morning. You turn on the news and you hear, this road's closed because it's stuffed and 3 wastewater treatment plants have decided to pour poo into the ocean so no one can swim anywhere. It does feel like we're a little bit third world where we can't afford the things we need to be a great country. Where do you see us on that kind of, on that plane? Because it's frustrating to me that we've paid so much tax and all these interest rates and our country's not getting any better. It seems like it's getting worse and a bit harder to live in it.
Yes, well, this government's citing the uninspiring statistics that we spend actually amongst the most in terms of the proportion of GDP we spend on infrastructure, and we get the least bang for our buck.
Yeah.
And a large part of that is the stop-start nature of it.
Shiny new projects, I think was the word.
Yes.
Yeah.
Well, shiny new projects that then get cancelled.
Yeah.
And all those hundreds of millions of dollars that have been spent on consultants
Yeah.
is wasted. So, but if we could only depoliticise the infrastructure
Lots of
pipeline,
things.
but honestly, the infrastructure pipeline, does it get any more political than that? Should we build a road here or there, or a hospital, or a sewage treatment plant?
Imagine if
very
we just
political.
could, like so many other countries do. They just go, we need some hospitals over there. Let's build that and let's put a tunnel there because you people need it and you've all paid for it.
But yeah, with that report about infrastructure said we actually need to spend a lot more money just on maintaining what we've got so we don't get more mower points, which is also, that's not inspiring as a
Deeply
politician either.
unsexy.
Yeah.
Exactly.
Hard
You're
to
not
sell.
going to say, look at these pipes, they're so much better.
They're
You
so
can't see
well
them because they're
maintained.
underground, but trust us.
Yeah, but not having poo in the seas,
Yeah.
Yeah, we want to
plus.
swim in our beautiful oceans.
Yeah.
So when do you think we're going to spark back to life? It sounds like we've gone from green shoots to seedlings. So you're
Well,
seeing
the
a bit-
recovery actually started in the middle of last year.
Yeah.
It just always takes a long time to feel real.
particularly for us as end users, so to
Yeah,
speak.
well, the
Yeah.
labour market always lags the rest of the economy by about 6 months. I mean, people think about how bad the recession is, they think about unemployment, which lags. They also think about business failures, and essentially the IRD didn't do many liquidations during the COVID period. They sort of allowed firms to get away with unpaid PAYE and GST to
Sure.
an unusual extent.
Yeah.
And so now I think a fair amount of the liquidations we're seeing now actually relate back to that period.
They're finally catching up on
Yeah,
the
but I
taxes
think
and-
it's
yeah, okay.
adding to the perception on the street that things are still getting worse, when actually, in our business survey, the big improvement has been in what firms are saying about how the last month went in terms of activity. And in our consumer confidence survey, the biggest increase was in the question about personal financial situations here and now. And if you look at the Centrix data for consumer arrears, it's an awful lot better than it was a year ago. And yet I think the person on the street probably still thinks they're waiting for the recovery to start, but it's actually well underway. The question now is that, given the fact that interest rates are now rising again, will that head things off again, or will we push through that?
Where can you look for how the economy is actually going in a way that I can understand it? Because if you watch the news, it's probably going to lean you one way and get a bit scary because they want the clicks or they want the viewership. But then if you talk to the banks, they kind of just want you to take their product and sign up with them. Where's a good, balanced, neutral place to go and find out how we're going economically, outside of your own wallet, outside of the media, and outside of a bank? Is there anywhere?
Well, bank economics teams are arm's length. That's a constant challenge in our job, that people think that the CEO rings me up and says, hey, look, we want to sell more of this product, so can you please tell people that interest rates are going to do this?
Make more money.
Honestly, if
We're not thinking enough.
I mean, honestly, if we did that sort of thing, people would see through you in a flash.
Yeah.
And so we don't seek approval from anyone to publish our views unless we think we're getting into highly political ground and just need to give the comms team a heads up. But generally speaking, our views genuinely are independent, because they wouldn't be listened to by anybody if they weren't.
Yeah.
And bank economist teams do attempt, not always succeed, but do attempt to make their stuff accessible to the person on the street. So that's not a bad place to start.
So there's press releases that come from you and your team that kind of give
you can
an
just
indication.
go to research.anz.com and you can sign up for various releases, including we've got business confidence survey, consumer confidence survey, a weekly report that sums up all the economic data that's come out in the last week and whether it's what it means, that sort of thing. I do a podcast, competitor, every Monday morning.
No such thing as competitors in podcasts. The rising tide floats all boats.
Basically just verbalising that data report. So there's a lot of stuff out there.
Awesome.
I think our competitors possibly write some stuff as well. I'm not sure.
Yeah.
Who knows? Who knows?
Blue, yellow.
Yeah. All four of you.
Okay.
Good.
And predictions for the year. What do you? You kind of think that maybe we're stable for a lot of this year, or maybe a little rise again, or a little bit of
so we actually see a pretty textbook recovery, but every economic cycle is different. And the general view is that this one's going to be different because it's the housing market's not going to fully take part in it. So that means, a milder recovery. But interest rates have come down a long way. Our commodity prices are doing quite well. Global growth has held up much better than anyone expected. Obviously, anything could happen from here, but it's actually, the hit from the volatility in the last 12 months has been much more modest than anyone thought it would be. So that's a good news story. So why wouldn't the economy recover? Put it that way.
Yeah.
So,
And should people be fixing their mortgages?
we're in our frontline staff get asked that, and they're like, "I'm not a financial advisor." So in our Property Focus, which is a monthly publication analysing how the housing market's going, we have a page in there called Mortgage Borrowing Strategy, which does not reach any firm conclusions because everyone's situation is different.
Yep.
But it does outline some of the things you might like to think about, sort of spelling out, for example, that if you're fixing for only 1 year, you're actually implicitly assuming that rates are going to be X a year from now. Otherwise, you take the 2 year.
Yep.
So when you sit back and think about that, do you think that's realistic? So just encouraging people to make structured, informed decisions.
Yeah.
So
We love informed decisions,
Yeah,
don't we?
yeah. And for lots of my clients in this environment where we've got some stability, likely the indicators are that interest rates will rise into the future, they are looking to fix for longer term if they're not going to sell their property anytime soon, allowing a piece to float in terms of paying it off a bit faster, but not floating too much. So that seems to be a really good balance of making progress and sleeping at night.
Yeah.
Because again, knowing you're never going to have ultimate certainty other than things will be uncertain.
Yeah.
And I think if you know your numbers in terms of what you're going to pay for a set amount of time, that speaks to a lot in terms of how brave you can be elsewhere in terms of investing, etc.
A big chunk of consistency with a little opportunity to
Exactly
smash down
right.
some principle.
Exactly right. For most people, and that's not individualized
We would
financial
never give
advice.
individual
But that's a
advice.
really good steer, and we don't have a crystal ball, don't know if what's going to happen in the future.
Apart from Sharon's crystal ball. In her
Yeah.
office.
Yeah.
it's a little murky, my crystal
Yeah,
ball.
yeah. I listen to what you say and I'm like, I'm trying to interpret in my head. It must be like a special speak that you learn at varsity, but you've got so much good information. Knowing that the waiting and doing nothing, sitting on your hands floating, that has a big cost to you.
Yeah.
It's kind of like when people are trying to rent out their house and they're waiting for this bigger increase in rent, and then the months go by and it's like, well, if you just rented it at a lower price at the beginning, you'd be better off. So I think that's where lots of people are sitting with their mortgages at the moment. And again, psychologically, you do pay a price in terms of that uncertainty, being obsessed around interest rates and just focusing on other things when you've locked them in for a bit.
Stop trying to chase the dragon down back to 1.99 because it's not going to happen.
Rents are interesting at the moment, actually, because they're falling. The new rents are outright falling about 3% a year, more in Wellington, for Wellington. But, that tells you something about the fundamental demand and supply for housing at the moment.
Yeah.
And possibly about the demographics who's moved to Australia.
Yeah, and the labour market as well, and places, in Wellington it's tricky.
Yeah, but first-home buyers, they do weigh up the cost of ownership, which isn't just the mortgage, but also rates and insurance versus the cost of renting. That cash flow can be quite a big...
absolutely.
Yeah, and so if rents are falling, then obviously that means fewer first-home buyers are likely to take the plunge, and that's part of also the reason why we see the housing market just chugging along quietly for a while yet rather than taking off.
And again, knowing that it's so interesting, isn't it? Because knowing how it's cyclical and, when house prices start to increase into the future, then we all jump on and that feeds it and then we go again.
FOMO is a huge thing.
Oh, it really is. All these psychological drivers. And I think it's interesting to know. And I think that does make you have a better strategy in terms of, okay, well, all of this stuff I can't control. I know I can control this. This is what I focus on, not get distracted.
Yeah. Stripping the emotion away from money
It's
is
just
hard.
noise. It's just noise. And I swear I come every OCR announcement and I say the same thing, Control the controllables.
Control what you can control. If you had to give one sentence of advice to households right now, not individual advice, of course, but broadly speaking, what would you give to them from your position as a chief economist of a big bad bank?
Things will get better. Things are getting better. I'm not sure the person on the street is seeing that yet, feeling it. Maybe they are starting to, because the unemployment actually ticked a little bit higher in the last read, which was unexpected, which sounds like really bad news. But actually employment growth was stronger than we expected, but there were more people than expected started looking for work, and that's actually a sign that people are encouraged that it might not be a complete waste of time. It is
so
actually
delve
a
into
sign
the headline
that
a little more.
things are actually the labour market is healing.
Yeah.
It is improving. It takes time,
Thank
for sure.
goodness.
That means more people getting jobs, earning money, helping the economy grow. What's your favourite movie about money? Tell me it's The Big Short.
The Big Short is a fantastic
It
movie.
is
Yeah.
such a good movie.
Yeah.
I started watching it.
Such a
I've
good
become a
movie.
money nerd and I just watch The Big Short all the time. It's so good.
So good.
Well, thank you so much for your time. It's you've got a great way of explaining what seems to be unexplainable for a lot of normal Kiwis, but I really appreciate your time. I understand a lot more about where we're headed, and you actually gave me a little bit of hope. Hope's not a strategy, but hope that things are getting a little better. Maybe it's the end of the podcast. No, it's not the end of the podcast. But as always, Katie, thank you for joining us.
Pleasure.
And yeah, I hope that we can get you back in a year's time and go, hey, you were right. Things are getting better.
That would be nice.
Wouldn't that be great?
Unless there's another bat-based virus, in which case we're just...
It's not going to happen.
Yeah, we might have to do the podcast over Zoom.
Yeah, let's
not
not.
go
No,
there.
you can't finish on that.
Yeah.
Finish on a positive
On another
quote.
pandemic.
Finish on a positive quote then.
I
Give us
just
another
did.
one
I
from your
said
quote.
things are getting better.
Okay, we'll leave it there then.
Okay.
Thanks so much, Sharon and Katie.
Pleasure.
Thank you.
If there's a theme from that chat, it's this. The OCR is a seemingly insignificant number, but it does signal a lot. It tells you how confident the bank is. It shapes what banks charge you, which can be a lot, trust me. It affects how cautious businesses and households feel. Sharon gave us her base case for what happens next, and Katie laid out what smart households should be doing right now. And if you listen closely, you might know what to watch for before the next OCR decision. If this episode helped you think more clearly about your mortgage, your savings, or your next move, share it with someone who's got a rate roll-off coming up. They might thank you. Till then, I'll keep asking the question, where's my money? This episode of Where's My Money was made possible thanks to our friends at Enable Me. Mortgage on your mind? Stress less with a smart financial strategy. Take the first step by heading to enable.me today.